Hi, everybody. Welcome to the IC Topic Chats. Today is Thursday, April 21st, 2022. We are very fortunate to be joined by the current outgoing chair of the Independent Consulting TIG. That's our flag, by the way. I'm the flag bearer. Someday maybe we'll actually pass it along to somebody. But anyway, our guest host today is Nina Sabarre, and she did her dissertation on independent consulting. Like, what? Who does that? She created the word evalpreneur. Is that right? She did. Anyway, so we're very happy to have her today with the IC Topic Chats. She's going to be presenting on redefining level of effort to rethink budgets and reclaim time. Well, that's a lot to do. Okay, well, anyway, I'm going to pass it on to Nina and welcome her. And if you haven't done so already, please put your information in the chat so we know who you are. And we are recording, and so this information will be out on YouTube if you ever want to rewatch it again. With that, I'm going to be quiet and let Nina take over. Thanks a lot, Nina.
Thank you, Matt. Hi, everyone. Thanks so much for joining today. So as Matt mentioned, my name is Nina Sabarre, and I'm here today to show you a new way of budgeting that my team at Intention to Impact uses to redefine effort and reclaim our time. So first, a bit about me and I2I. Intention to Impact, also known as I2I, is a research, evaluation, and strategy consulting firm known for helping purpose-driven organizations measure and maximize their impact. By training, I'm an evaluator and applied researcher, and I believe that that's the best way I can make an impact in the world. But my true calling, I've recently discovered, is entrepreneurship. Before I started my company in 2018, I spent a few years working as a freelance independent consultant that may be how many of you are working now. And during that time, I found myself burning out several times. And so when I started building I2I as something bigger than myself, I knew that I wanted to rethink how we develop budgets so that we can break away from the hourly grind. So this session is all about how to develop better budgets that are principled and fair and empower you to exchange value for money instead of time for money. So here's the game plan. I'll share a bit more about the thinking and rationale behind this new budget calculator, and I'll go over the steps that we use to redefine level of effort, and I'll do a demo of the calculator that we use internally. Okay, so let's unpack this rationale a bit more. So independent consultants are often hired to exchange our expertise for money, and it's easy to conflate our expertise with billable hours. And in budgets, this is often described as level of effort. The traditional budgeting model is to figure out how much time each task will take and then multiply that time by your hourly or daily rate. But the thing is, measuring effort via working hours or days alone perpetuates a work culture that prioritizes time, urgency, and efficiency over value, humanity, and actual impact. And so we recognize that time is actually just a unit of measurement, not an indicator of progress. In fact, I like to think of time as an organization of my energy and attention. So rather than meticulously planning every minute of every day in the spirit of productivity, it's important to consider how much energy and attention each task requires in relation to our priorities and values and everything that's going on in that season of life. And so with all that in mind, we designed our internal level of effort calculator to account for varied levels of energy and attention required for different tasks and project contexts. Here's what it looks like for us. It's actually really simple, but it makes a world of difference. So here in column A, we've listed some criteria that influence effort. And I know this is just a screenshot for now, but at the end, I'll pull up Excel and zoom in a little bit and actually demo how this works in practice. So for example, if a project is extremely uncertain and complex, it adds to the effort needed. Whereas when projects are fully aligned with our values and the work is meaningful in the pursuit of equity, then we're energized and we're excited to take it on, which relieves some effort. So that's what column A is showing, the criteria of uncertainty, complexity, and alignment in values and equity. And in columns B and C, you'll see how we've started to operationalize these criteria using quantitative scores and qualitative descriptions. So again, in the final portion of this presentation, I'll pull up a spreadsheet so I can demo how it works. But for now, I'll walk you through some steps of how we got there. So this is I2I's level of effort calculation process. First, we consider the criteria of what goes into measuring effort. And for every organization and for different seasons of life, this might look different for you. Then we describe the different levels of each criteria. And we determine the baseline, set numeric scores relative to that baseline, test with past project budgets to make sure that the minimum and maximum make sense in reality. And then we internally validate with our team to see if the revised level of effort serves its purpose for reclaiming time and energy. And then we implement with future projects and externally validate with our clients. And of course, this process is worth revisiting and refining over time as your project skills and clients evolve over time. Okay, so let's talk about each step in more detail. The first step is to consider the criteria. Thinking about your typical projects, what are the contextual factors that influence your level of energy, attention, and overall commitment to the work? We actually recently guided another organization through this process, and here are some of the criteria that their team came up with. Mission alignment, team inspiration, partner alignment, longevity, whether it's a short-term or long-term project, complexity, reporting burden, and uniqueness. Next, you unpack these criteria by describing all the possible levels. You start by asking yourself, for each criterion, what are the different levels or circumstances in which more or less effort is required? So here are some examples from this organization of the first three criteria that they developed. We've got mission alignment, team inspiration, and partner alignment. And next, based on these levels, you determine the baseline. And really, baseline is a bit of a misnomer in this context because it makes it sound like it's the most basic, but in reality, it's the most ideal scenario. So at your baseline, every hour is used efficiently and no energy is wasted. And this means that the project is running like clockwork. At first glance, we identified the following levels as baseline. For mission alignment, the baseline was full alignment with mission and goals. For team inspiration, the baseline is neutral. For partner alignment, the baseline is having worked with the partner in the past, so that although there may be inevitable challenges, just like there is with any partners, they are eager to work with them again. And as you can see, baseline is not always the first level, and this will make more sense when we assign different scores. Then when we were workshopping this example with the organization that we were helping, we realized that the team inspiration baseline was actually off. Feeling neutral about the project does not really lead to a project running like clockwork. At the end of the day, this tool should be used to empower your team to take control of your time in a way that gives you more space and energy. And so what you'll see shortly when we give scores to each of these descriptions, when the baseline is 0, every hour is counted equal. And positive scores add effort to each hour. And negative scores indicate that the criteria introduces more ease than effort. And it actually gives your clients somewhat of a discount when it turns into the budget. So negative scores in that case should be used sparingly because it doesn't really make sense to penalize or pinch yourself for time just because a project is enjoyable. So that's all to say, for this team inspiration criteria, instead of setting the baseline at neutral, we completely removed neutral and set the baseline at feeling inspired and excited, because this is the baseline assumption for this organization. So after describing the levels and setting the baseline, then you set the criteria. First, you ask yourself, given the number of criteria and levels, what is the biggest discount or upcharge that you're willing to and able to offer? And so this part gets a little bit complicated. And so I'll explain it more in depth when I pull up the spreadsheet and we can calculate and plug in some numbers. For now, here's a screenshot of the first three criteria. So you'll notice the baselines are indicated with a score of 0. After setting the scores, test the revised level of effort calculator with past projects. And we recommend testing with a project that was more challenging than expected, and also another project that was more enjoyable than expected, and seeing if the revised level of effort calculator more accurately reflects the amount of time and energy spent. And using your past projects as examples, internally validate with your team. Does the revised calculator, again, more accurately reflect your level of effort rather than considering time alone? And how does it feel? How does it change your experience or approach to the work? Once you've tested it with past projects and internally validated with your team, Then you can start implementing with new projects. As you go, you can externally validate whether the revised level of effort produced an acceptable budget for your clients. At the end of the day, it also depends on what how they'll respond and what they'll accept. So here's the tricky thing about setting budgets. Clients often have budget restrictions that are outside of our control. In that case, we don't necessarily throw the calculator out the door and just adapt to whatever the client says is their ceiling, but instead we readjust the scores and levels so that it makes sense to both our team and the client. Hence the need to revisit and refine as context and needs changes over time. And so that's how we figure out our level of effort calculator. Here's our contact information if you want to chat more even after this conversation. But for now, I'm going to switch over to Google Spreadsheets just to show you more in depth what it looks like in practice. And then I'll open it up for questions, comments, other ideas that you may have. So this is our simple version of our internal level of effort calculator. We've gone through many iterations of this, including having much more criteria. But at the end of the day, this is on what we've settled on that makes the most sense in our project context. And so I showed you the screenshot before. I'm just going to zoom in a bit. So this is how we think when we're starting to budget for a project. Before we even go into what are all the tasks and phases of work and how long do we think everything will take, we start by devising or developing our revised level of effort score. And so we think through like, what's the level of certainty or uncertainty in this context? At baseline, we have all the information and resources that we need to complete this project in a timely manner and produce the expected deliverables. And you all know this kind of rarely happens. Oftentimes, it's more like we have some information and resources, but we're not completely sure, or we're lacking most of the information and resources, and we need to spend significant time up front figuring things out. Or in the most extreme circumstances, we straight up do not have information and resources needed. So it's impossible to predict how this project will unfold. And this really empowers us because I'm sure all of you can relate. When you're thinking about the budget, there's just so much unknown. And oftentimes it feels like you're shooting in the dark. And so we kind of build in that uncertainty into the budget by adding this score. And then with complexity, baseline project is straightforward and simple. We can do it in our sleep. This is very rare. More often than not, it's fairly straightforward, but we will need to navigate complicated dynamics, or it's complicated and we'll need to spend significant time up front understanding complex issues or navigating politics, or the project is a mess and the clients don't really know what's going on. So we'll need to lean in with complexity and provide clarity along the way. But also, like I mentioned, so these are all things that add effort to projects. And there's also some things that add ease. For example, when it comes to values and equity, our baseline is the work is aligned with our values. That's kind of just the baseline. We're not going to enter in a project that isn't aligned in our values. But when the project is not only aligned in our values and there's potential to advance equity in the work, to us, that energizes us and offers a negative score, which really means a discount in the budget. And that's how it ends up showing up in practice. And when the work is aligned with our values and it's very likely to advance equity, then it's an even bigger discount. And lastly, when it not only demonstrates our values, or it's not only aligned with our values, but it demonstrates our values in practice and directly advances equity, then that's kind of the highest discount. And so what it means in practice, for every hour, we determine the scores and we manipulate these scores based on the context. And then we just add it all together. It's really simple to come up with our revised level of effort calculator. And so a minimum score means the lowest scores, which means the -0.4, 0, and 0. And so that means that a project for every hour could have a discount, and a maximum score is 1.8. And I just want to show you again this more complex version that we walked through with another organization. And the reason these scores are different than ours is because ours is really simple. There's only 3 levels. So we have a tenth of a percentage is the score difference. But here, with so many variables, you can imagine if we just did a simple calculation of a tenth of a score for each level, of a percentage for each level, then it would be like really unrealistic as far as the discount and the upcharge for the client. And so here we had to get a little bit more creative and think more critically about the difference between the baseline and each level of the criteria. And so in our case, we have just, positive scores and negative scores. In this case, they have positive and negative scores within the criteria. So for example, longevity, the baseline is that this project will likely lead to future opportunities. That's the goal. But the discount is that the project will for sure certainly lead to other project opportunities. So it's worth giving this discount. But the upcharge is it will likely not lead. It will definitely not lead, or this project, the work from this project will be able to be leveraged for future work. I think this one might actually be a mistake. This might have to be negative here. I don't remember what happened here, what we were discussing. But anyway, this is what it looks like for this group. Their minimum is 0.625, their maximum is 2.625. And for every hour, this is how it ends up looking. And so we actually went through with them in a project example and came up with this revised score of 1.18. And here's an example of what it looks like when actually calculated into a budget. So just for sake of simplicity, let's say that this project takes 10 hours to set up, 20 hours to do the research, 20 hours to do the analysis, 10 hours to debrief. It's just very simplified. So this is a project that's expected to take 60 hours of a consultant's time. And at an hourly rate of $100 an hour, the standard cost would have been 60 times 100, and maybe you add on overhead if that's part of the way you budget. But in this case, because the LOE score is 1.1875, the revised cost is 7,125. And if this project was at the minimum, there would have been a discount making this project 3,750. And if it was at the maximum score, this project would have really cost 15,750. So realistically, it's going to fall somewhere in between here. But yeah, that's what we do, and that's how we think about level of effort. And with that, I'll stop sharing and catch up on the chat a little bit.
One of the questions that somebody asked was, is this something that you will share as a sheet, I guess a Google sheet, not an Excel form? It's obviously not that difficult to create something like this, but I didn't know if this was something you were prepared to share.
Yeah, I'm happy to share this. I'll share it right now, actually, in the chat.
Okay, share it in the chat. That's great. Question for you, Nina. You did your calculation of hours times hourly rate, and then you did your calculation. Now, I know that when I have to justify to my clients, particularly my National Science Foundation clients, they want to see hourly rate times hours, and then that's it. And then it would be a lot of explanation, probably more than I want to do, to go through this series of variables. I'm not saying I couldn't do this, but I would probably run the calculation against my hours.
Yep.
And then times my hourly rate and be like, if it's 25% more and I have 100 hours booked in, well, that's 125 hours to do this project, versus it's 100 hours times $100 an hour, and then then 1.125, and then it goes up. Calculation works out the same, but then I don't have to try and explain why you're a complicated client that doesn't pay on time, and I have to give you an upcharge for time on that level. I would probably put it against the hours versus the final calculation.
Yep. Yeah, Matt, we do it both ways, and honestly, the math works out the same. We've done it some way where we figured out, okay, our hourly rate is X amount, and then 1.3, 1.2, 1.4, this is like what we're actually going to bill at. So there's our hourly rate and our bill rate. So we've done it that way before, or we've done it this way where it's calculating all the hours added at the end. Either way, it shakes out to be the same. But you're absolutely right. We don't necessarily, some clients we've explained that we use an intentional level of effort calculator that considers more than just time, takes into account complexity, uncertainty, and the extent to which it aligns with our values. And clients tend to appreciate that, but we never go into the details with them, because you're right in saying you don't want to tell a client you're too complicated, this project's a mess. That would not go over well. And it's not always a bad thing, right? Complicated clients doesn't mean they're a bad client. It's really just a tool internally to help us feel good about the budgets, because we've been far too many times in the place where we feel terrible about it and feel really pinched and feel like there's not enough spaciousness, or that it's just like sucking all of our energy out of our life. And so this is just a way that we use to kind of internally plan, and we do communicate it at a high level, but we never put these tables in, for example, a proposal. That never shows up in that way.
So a couple things. Jessica just pointed out that you need to change the access permissions in
Got
the
it.
document. And there were a couple questions in the chat about complicating with billing rates, and I guess the question is there anything that's legal? I guess my question for you, and I'm gonna pause the recording after this question, but have you gotten to a point where you go through this exercise and you go, maybe we shouldn't do this project at all, because we realize after looking at these different variables, either it's the three or the multiple ones that you're looking at, going, this is really not in alignment with who we are. Has that happened to you, where you've gone through this costing exercise and walked away from a project?
Yes, and we have, especially when they say something like, we have a $10,000 budget and this is what we want. And then we go through the exercise and we're like, this is not a $10,000 project. And so those are the cases where it kind of empowers us to take that stance, rather than thinking from like more of a scarcity mindset of, oh, $10,000, I can't say no to an opportunity at all. And that's happened before. And so it's mostly been kind of in response to what the client felt it is. And it's given us some justification to push back and say, maybe we would say something like, we would love to work with you for these reasons, but with a $10,000 budget, considering the level of effort required, this is what we could offer, and maybe offer a smaller scope. So it's kind of empowered us to think and negotiate in that way. And then in response to the other question about federal legal, what was it? Whether this would fly with government clients, that's such a good question, because I don't know. That's something I should have said up front. This is what we use with our clients, and we mostly work with foundations. And so take that with what you will. Like, I know some folks working with nonprofits, this might not work. With government, I know there's a whole different way of figuring out government budgets. And so apologize, I don't have any experience working in that context. But with foundations, this has been fine.
So we're in the middle of finishing up a budget for a client, and this is the struggle we come up with. We love the client. We've obviously not done your exercise because this is new to me. We've done our own version of it, I suppose, in reality. But at a certain point, what is the value, the overall value of what we're trying to provide to this client based upon their budget and what they're trying to do and who their clients, who their funders are, and these sorts of things. And I can't help but say, yeah, I did all these calculations over here, but it's going to be 50,000, right? Or some number that makes sense. And that's the number for this one client. And I'm sitting there going, I know I want to do all these things. And so my staff member turns to me and says, well, what am I supposed to do? Am I supposed to cut back on hours to get this to fit? Should we change our billing rates? All these things. And so it kind of speaks exactly to what you're saying. And I said, okay, so here's really what I want you to do. I want you to just price this out. I want you to, because our principle for Goshen, our first principle is integrity. I want you to use total and complete integrity. If you think doing this piece of that is going to take 20 hours, don't put in 15, put in 20 hours. Don't beat around the bush. If it's going to, because these clients know who we are, they like what we do. We want to develop a long-term relationship with them, and I want honesty from. Well, we're after 1 year of working with them. I want to continue honesty with them. And if it turns out it's 57,000 and we want it to be 50, we should say it's 57,000, and let's just stand by that. Because this is a hard thing to do, even though I think they might only have 50. Let them be the person to say, well, let's not do this exercise this year, and we will put this off to the next year when we could do it. I don't know, is that something you ever think about with this? I mean, I think it's kind of baked into your process, but I think at a certain point, I step back and I say, well, what is the value of what we're doing versus what is the cost and all the details, but what is the big picture value? I don't know if you have any thoughts on that.
Yeah, I absolutely do. I think that's right, Matt. And I will preface by saying, independent consulting, entrepreneurship, businesses in this field, there's no one size fits all solution. And I learned that from my dissertation, talking to so many entrepreneurs and consultants. I recognize everyone is in a different spot of growth, or not even growth, because some folks, it's not about growth for them. It's about, their skills, their relationship with the client. So everyone has different values. And so I think this exercise and asking yourselves big questions, like you said, Matt, thinking about the value of the work, it's really important to put into context what season you're in professionally and personally, because sometimes what's acceptable budget wise for you now is not what it'll be in 10 years. And so I think, if anything, although it's nice to have a rubric and a calculator, and for us that's given us confidence, it's so important to just like right size for where you are and who the client is and what the work is, and not, it's supposed to be a tool to make you think differently, but not something to follow like to a T, because every context is just so different. So just want to offer that. But I definitely agree with what you're saying, Matt. Sometimes it's just about the big picture thinking, and then also using it to offer to educate the client. That's something I found in my dissertation as well. When it comes to the demand side for evaluation, oftentimes clients just don't know how long these things take. And so when they say the budget's 50,000, and then we say, okay, what can we do to just be at 50,000? Then they just kind of operate with this idea that, they can set the budget all the time. And I mean, at the end of the day, there is a power dynamic and they do have the decision-making power, but we do have the power as well to educate. And it is in our skill set, it's in our responsibility for the field to be able to say in a principled way with integrity, how much time this really takes, and not just thinking of time alone, because if we're all just, clocking hours against time, then that means that you're treating every hour the same. And this is another thing that we hope to impress upon with this thinking, is not every hour is created equal. And so think of hours differently, thinking about the energy, the attention required, all of that.
So let me put another situation to you, and I know this is something that you've considered, and I think you kind of baked it into the calculations that you were doing. So we're given the situation where somebody wants to give us $10,000 for like a $30,000 project. What if you get the opposite? And I get this from time to time, and I still don't know how to deal with this. Where somebody says, "Here's $30,000," and I know it's a $10,000 project to me, right? But they're like, to them the value is 30, and they might even go up to 50, and I'm just sitting there going, "Oh my God, isn't this great?" in my head. But then I got to step back and go, how do I do this? How do I operate? Do I increase my billing rate to $300 or $400 an hour? Because the value to them is $30,000, but the cost to me and the way I would cost it out to others would be $10,000. So how do you consider that situation when you could take a lot more in than maybe what you would bill somebody else?
That's such a good question, Matt. And I'd really love to open up to the group and see if others have ideas on that.
Let's do it. I'm going to stop the recording and everybody can jump in, because I know Kurt's probably waiting to talk here, but I'm going to stop recording and say goodbye to our YouTubers and say hello to everybody else right now. Okay, let's see.